How to fund a limited liability company, LLC. Introduction, Understanding LLC Funding. Are you ready to get your LLC off the ground? The key to success starts with proper funding. Stick around as we break down the most effective ways to fund your LLC and set your business on the path to success. Have you ever wondered how to fund a limited liability company, LLC? In this video, we will explore the different ways to fund your LLC, breaking down the pros and cons of each method. Whether you're starting a new business or protecting your assets, understanding the funding process is crucial for success. Let's dive in. Footnote. This section introduces the topic of LLC funding and highlights its importance in asset protection and business growth. Rule number 1, Funding through contributions. The first method to fund an LLC is through contributions. This means that as a member of the LLC, you contribute money to the company, effectively moving your personal funds into the LLC. For instance, if you have $50,000 in your personal account, you would write a check or transfer that money directly into the LLC. This approach is particularly beneficial when setting up a Wyoming holding LLC to protect assets like cash, CDs, or treasuries from personal creditors. If a lawsuit occurs, the LLC's charging order protections safeguard the contributed assets. Additionally, contributions are ideal when starting a new business. If you need initial funding for a bakery or any other small business, you can make a contribution to the LLC to cover the startup costs. This method works well in scenarios where you need to fund real estate ventures or acquire properties, especially when dealing with down payments for loans. Footnote. This section outlines the contribution method, detailing how members directly transfer funds to the LLC, with examples of asset protection and business funding scenarios. Drawbacks of contributions. While contributions are straightforward, there are some risks involved. For example, if the LLC is sued and its assets are liquidated, the members are the last to receive payment after secured creditors. This means that the funds you contribute could be at risk if the LLC faces a lawsuit. Therefore, when choosing to fund an LLC via contributions, it's important to assess the potential liability and weigh the risks involved. Footnote. This section discusses the risks associated with contributions, particularly the prioritization of secured creditors in the event of a lawsuit. Rule number 2, Using loans to fund an LLC. Another option for funding your LLC is through loans. In this scenario, you or a third party loans money to the LLC. This is a preferred method when acquiring property for cash. For example, if you're purchasing a mobile home park or another real estate investment, you could contribute a portion of the necessary funds as a contribution and then loan the remainder to the LLC. A common practice is to establish a loan through a separate LLC that isn't personally associated with you, such as a Wyoming LLC. This structure helps maintain anonymity and strengthens asset protection. By doing so, the loan is considered a secured debt against the LLC's property. This ensures that, in the event of a lawsuit, the lender is paid first, reducing the risk of losing your personal contributions. If the LLC secures the loan with a deed of trust, the funds are protected in the event of a legal dispute. Footnote. This section introduces the loan method of funding, emphasizing the benefits of using a third-party LLC for anonymity and securing the loan with a deed of trust. Perfecting the loan. When structuring a loan, it's essential to perfect the loan by preparing a promissory note and securing it with a deed of trust or other collateral. This formalizes the transaction and ensures that the loan is treated as legitimate. For example, in real estate transactions, using a promissory note and a deed of trust guarantees that the lender has a secured interest in the property. This method provides additional protection and offers the opportunity for refinancing in the future, should the LLC wish to take out a loan to pay off the original debt. Footnote. This section explains the importance of perfecting the loan with proper documentation to ensure that the loan is secured and legally enforceable. Loaning money to a business. For businesses that need funding but don't want to risk contributions, loans are also an effective option. If you are funding a new or existing business, you can loan money from an LLC that holds your cash. For instance, if you are starting a bakery and need $300,000, you could loan a portion of that amount to the business and secure it with a UCC-1 financing statement. This protects your loan by securing it against the assets of the business, ensuring that if the business faces financial trouble, you remain a priority creditor. Footnote. This section highlights how loans can be used for business funding, specifically for startups or expansions, with a focus on securing the loan through UCC filings. Contributions versus loans, making the decision. When deciding between funding your LLC with contributions or loans, consider the level of risk and protection you need. Contributions are simple and effective, but they expose you to greater liability in the event of a lawsuit. Loans, on the other hand, offer more protection and help keep your funding separate from the LLC's liabilities. However, loans require proper documentation and structure to ensure they are respected as legitimate debts. Footnote. This section compares contributions and loans as funding strategies, offering guidance on choosing the best method based on asset protection and risk tolerance. Hard assets, funding through transfer. When moving hard assets, such as real estate or collectibles, into your LLC, the process is similar to a contribution. For example, if you own a rental property and want to transfer it to your LLC, you would deed the property into the LLC's name. This is considered a contribution. Similarly, for collectibles or other non-title assets, you should document your intention to transfer the items to the LLC and store them properly, such as in a safe deposit box in the LLC's name, to establish ownership. Footnote. This section explains how hard assets can be contributed to an LLC, emphasizing the need for proper documentation and storage to ensure the transfer is legally recognized. Conclusion: choosing the right funding strategy. Funding an LLC doesn't have to be complicated, but choosing the right strategy requires careful thought. Whether you fund your LLC through contributions, loans, or asset transfers, it's crucial to understand the implications of each method for asset protection, risk management, and future business growth. If you're unsure about which strategy is best for you, consider scheduling a free consultation to discuss your options with a professional. Footnote. This section concludes by encouraging viewers to consult with professionals to ensure they choose the most appropriate LLC funding strategy. Now that you know the different ways to fund your LLC, it's time to choose the right strategy and get started. Don't let funding hold you back. Take the next step and build the business of your dreams.